Overstock reported revenue that came in ahead of estimates in the first quarter, though down 29% year over year. The company also reported a smaller than expected loss. Let's dive deeper into the quarter with Overstock CEO Jonathan Johnson. Jonathan, thanks so much for joining us. During the earnings call, you talked quite a bit about the lean into the strategy that you have for home furnishings market. So can you talk to us a little bit about that? How is that strategy going?
So we are just about 1 year into being 100% home furnishings and furniture company. It's going well. Was it a purposeful and intentional decision that we made because our home customer tends to visit the site more frequently, has a higher conversion rate, and a better average order value. Now, it's been a tough time to do it as hard goods have come down a little bit as consumers have shifted toward experiential. But we still think it was and is the right decision for us.
Hey, Jonathan, it's Julie here. It's good to see you. There's some interesting things happening in the competitive landscape right now. You talked about one of them on the call, and that is Bed Bath & Beyond declaring bankruptcy, which you said maybe could be beneficial to you in terms of market share. On the flip side, IKEA is announcing a big expansion, right? Planning to open a lot of new stores in the United States. So where do you guys sit in terms of that competition?
Yeah, large and fragmented market. There's a lot of white space, and so anytime someone goes out of business, creates more white space for us, and it's an opportunity to capture market share. Something we've been, focused on for several quarters is Bed Bath & Beyond was on the ropes. We expanded our small appliance and, consumer giftables. Think KitchenAid and Cuisinart and Keurig and Mr. Coffee. So we've been competing there. IKEA's expansion is more of the brick and mortar space. We're wholly online. We think our product is different than the product that IKEA offers. They're a worthy competitor, but we think we're in a little bit different space than they are.
Can you talk to us a little bit about the consumer, how the consumer is doing? I know that during the earnings call, there was some talk about evidence of a trade down, also signs of deflation. Expand a little bit on that.
Yeah, so as we've worked to expand our product assortment, it doubled in the last 2 years and then was up nearly 20% again in the first quarter. It's really expanding in the good, better, best mentality. And it has become more important that we're strong in the good and the better as consumers trade down. It's also important that we have strong loyalty offerings. We have a new credit card offering with City Retail Services that provides 0% financing for 12 months. And we're seeing a little bit more uptick on our buy now, pay later offering. So consumers are willing to spend. They just want the deal. And sometimes that deal means better pricing. Sometimes it means better financing.
Yeah, it's interesting that you talk about that because we really see, and you talked a little bit about promotioning on the call as well. We've been talking all week about pricing power, but it's really limited to food, for example, personal care, not happening so much on the apparel side or on the home decor side, right? I mean, what are you seeing in terms of that promotional cadence and trend right now?
Yeah, so I think there's still a little bit of an inventory glut in the home space. We saw this start kind of last summer, and so that's pushing prices down. I also think that as the supply chains freed up, people are trying to get rid of what is more expensive inventory to bring in new, fresh, probably less costly inventory that will push prices down in our space over time.
And we've heard a lot of companies talking about AI, machine learning. What do you, are you using any of that when it comes to your pricing strategies, when it comes to the way you sell?
Sure. I think a lot of potential uses for AI, helping product descriptions be better, helping customer service certainly can be used in pricing. So still early days, but we're working on projects using generative AI that we think will help our business and help us run even more efficiently, which anytime we can be more efficient, that should increase sales and put dollars on the bottom line too.
Hey, Jonathan, I want to switch gears for a minute and ask you about Medici Ventures, which is basically your venture capital arm that invests in blockchain, because there's something I'm confused about, and that is T0. My understanding was that T0, which is a crypto exchange that is funded by Medici in part, was closing down, but you talked about it on the call. So what's the status of T0?
T0 is up and running. It has focused. It had a crypto wallet, which it shut down to focus more on its token business to help companies raise money in the capital markets using a token. We're still very bullish on T0. We love its partner. We're co-investors with ICE. We think no one knows how to make markets better than ICE does. And so we like what's going on there. We hope that our investors dial into our Medici Day on May 31st to learn more about some of the companies in that Medici Ventures portfolio.
And is Medici a revenue contributor for you guys yet at all? And if not, do you expect it to be at some point, maybe when you start exiting some of these ventures?
So it's not a revenue contributor, but when there are exits, we do expect it to help the balance sheet. When there are exits for any of these investments, whether it's going public or a sale or something like that, our ownership interest will be cashed out, and that will be a nice balance sheet event for us if that's to happen.
All right, we'll keep in touch with you about it. Overstock CEO Jonathan Johnson, thanks for joining us. Appreciate it.